For joining us now to explore the financial market context of the just released 2019 GDP data is Adedayo Bakare, who is an investment analyst and macroeconomic strategist at Afrinvest Securities Limited. Good morning, Adedayo. Now, let's get your first reaction to the just released GDP data by the NBS.
Good morning, Chimeze. Thanks for having me on the show. Of course, the GDP results were out this morning, and it was unsurprising. It was well in line with our expectations. We're expecting, overall a GDP growth of like 2.2% in 2019, but we saw a higher figure of around 2.3%, and this was mainly due to, a broad-based expansion in both, the oil and non-oil sectors. When you think in terms of the performance of the oil sector, you want to think in terms of, the improvement in oil production. We continue to see relative peace and stability in the Niger Delta, and that continues to support, oil production numbers. One of the principal factors that also drove, the improvement in oil production was the Egina field, which came on stream in 2019, and as a result of that, we saw an expansion in oil production. Otherwise, in 2018, what we saw was a very, very weak performance in oil production. So overall, the GDP, the oil GDP expanded by around 4.6% in 2019, which was the strongest the economy has seen since 2017. In the non-oil sector too, we saw a modest performance. The oil sector continues to advance at over 2.5%, which is also weak. But, if you put it in the context of where Nigeria was coming from, prior to the recession, you observe that also the growth we've seen in the non-oil sector is still very, very weak. One of the, main drivers of the non-oil sector, were the agri sector. Now, for the agri sector, we saw an improvement in growth in 2019 to about 2.4% from 2.1% in 2018. Now, this is also, a good performance, but if you put it within the context of the historical performance of the agri sector in the Nigerian economy, then you discover that also we still continue to see the weakness in the agri sector. For us, we think this is mainly driven by continued, insecurity in the Niger Delta, sustained, low yields, in the agri sector, even despite, a lot of government support to the sector. Another main driver of performance in the non-oil sector is the ICT sector. Now, in Q4, we saw a bit of a moderation in terms of the GDP growth of the ICT sector to around 7%. But overall, the ICT sector expanded by 9.2% in 2019. Now, this is a slight moderation from the levels we saw in 2018, but this is not unexpected because, growth has been very, very fast. So you expect that a higher base will lead to a slight moderation. Overall, the ICT sector, continues to be the major driver of growth. And according to our computations, when you think in terms of, we recorded a growth of 2.3% overall. Out of that 2.3%, the ICT sector actually accounted for 1.1%. So when you think in terms of the main drivers of growth, you're thinking in terms of agriculture, you're thinking in terms of the oil sector, and you're thinking in terms of the ICT sector, in 2019. Overall, I think the principal takeaway from the figures we've seen is that growth remains very, very weak. So when you think in terms of, employment and incomes, towards, improving living standards and also reducing poverty, you discover that we would struggle to, sort of drive improvements in those areas. Population continues to advance at around 2.7%, and GDP is growing at 2.3%, which meant that, 2019 was another year where, when you think in terms of the income per capita of Nigerians, it was weaker. In 2020, the question is, are we going to see, a different trend? We are not so optimistic.
All right, Adedayo. Well, just to note that I'm actually here with my colleague, BC. Anyway, what is the value of the GDP numbers to investors, both current and prospective? What kind of signals do the trend give to investors?
Well, it's not entirely a positive signal. I think it's proper to, put the numbers in proper context. when we're looking at GDP numbers, let's even, take a look at the non-oil sector. The major components of the oil sector are, the agric sector, you have the manufacturing sector, you have the real estate sector, you also have the trades subsector, you have the ICT sector. Now, the question for investors is what is the outlook of these sectors in 2020 and beyond? What is, the government trying to do to actually, support these sectors? Now, in the agric sector, we continue to see a bit of government support in that area. The CBN is giving, all kinds of interventions. Has created all sorts of intervention funds to drive credit into the agric sector and also to bolster performance. But we know that most of the challenges of the agric sector cannot be resolved, by monetary policy. We need to find ways to drive, yields higher. We need to teach farmers to help them adapt to, the changing climate. We need to also make sure that the products that Nigerians are actually better at is what is being produced. So some of the challenges in agri sector cannot be, solved by credits. But in any case, it's still a very attractive sector, for investors, given the, all the kinds of supports that they get to enjoy in the sector. Now, moving to the trade sector, for instance, we have the land border closure, we have very high tariffs. That is not favorable to trade. So, for investors who are looking at the Nigerian economy, they are thinking in terms of, the trade sector has been in a recession for some time. The real estate sector has been in a recession too. So these sectors are very, very, are large components of the GDP. And what is government doing to actually make sure that these sectors move out of, the recession? Not enough in our view. In the real estate sector, you have all sorts of challenges around, there's high inflation, which affects credit. The mortgage sector is undeveloped. When you think in terms of even government spending, on housing is very, very poor. When you think in terms of the land administration, land registration, how easy it is to secure permits and approvals to actually build, all those things take a lot of time. We think investors will also watch out for that. Government policies have not been good in that area. So for us, we think it's really, it's negative signals while you have, very, very good policies in the agri sector, which should, attract investors. In other areas of the economy, we're not seeing those signs yet. And that is really what the government needs to work on to attract investment.
Okay, so what specific implications do the new GDP numbers have on the financial markets, particularly equities and the fixed income markets?
Okay, the good thing about equities is we have a sense of earnings. We've seen Q1, Q2, Q3 numbers, and even for some, companies in the market, we've seen Q4 numbers. So the recent release, the release of the GDP data is not exactly surprising. It is what is, expected. When you think in terms of the performance of the industrial sector, on the NSE, when you think in terms of the performance of the banking sector, the performance of the insurance sector, the performance of the consumer goods sectors, it has not exactly been, very inspiring, and that is what translated into the GDP numbers. So meanwhile, while we have, not a lot of companies are quoted on the exchange, but from, the numbers we've seen, we could at least, be able to gauge economic performance, and that was not too good. So we believe, investors are not surprised by these results. Most of, the results or the expectations on GDP have already been priced into decision making, and that is why you see that for since 2017, the equity sector, the equities market continues to record negative performances, and that is mainly because of two things. We think it's because the underlying macro environment is still weak, which also the 2019 GDP results suggest. Also, it's also in terms of the policies. Most of the policies the government should implement to actually, support growth, we are yet to see it. So for the equity sector, we believe it shouldn't lead to any fundamental change in trading. Trading will still be dictated by, short-term, bargain hunting and also short-term investor sentiments. In the fixed income market, the landscape has changed, since Q3 2019, since the segmentation, at least, of the OMO market from the treasury bills market. Again, the expectations in 2020 would be driven by, basically what the CBN is trying to do. When you think in terms of the underlying growth numbers, which is weak, and when you think it's also in terms of, very high inflation expectations, even the VAT approval, the land border closure, and also the possibility of electricity tariff hike, then you start to think that, okay, maybe interest rates should go up. But again, when you think in terms of the policies of the CBN, that is hard to say. So in the fixed income market, there's a bit of uncertainty, and investor decisions will depend on the actions of the CBN.
Staying with the impact on the markets now, there are some specific subsectors of the GDP report that have direct bearing on the performance of some companies listed on the NSE. Now, how do you see investors trading these sectors, including cement, oil and gas, telecoms, agriculture, based on their performance in the GDP report?
Okay. So for starting from the top, the agri sector, we have a few, firms listed. Again, I believe, most of, players in the agri sector are not actually listed on the Nigerian Stock Exchange. So for the few companies we have, the likes of Okomu, Livestock, Presco as well, we believe it is really their own earnings performance that will drive how, companies are going to, how investors are going to trade those stocks. For us, from what we've seen in 2019 and from what we've seen in the, the numbers that has been released, that is not exactly inspiring. So we believe investor confidence is also weak, even in the agriculture sector, which is supposed to be, the most resilient sector in the Nigerian economy. But the performance has not been exactly good, and we believe, investors will continue to price in that sentiment into the trading of their shares. If you move into the ICT sector, it was a good performance, especially in telecommunications, and from also the results we've seen from MTN and Airtel, numbers continue to be very, very strong, especially on the side of MTN. So we believe it should continue to enjoy a bit of positive investor sentiment. Airtel, is also almost over all its debt challenges, so that should give room for even more growth. So we believe investors would also take note of that in the ICT sector. So we are certainly positive in terms of the ICT sector. In the banking sector, it's really, 2020 is going to be a challenging year for the banking sector. We've had all kinds of regulatory pronouncements come into play, and really investors are still looking out for how banks are going to respond to, basically what the CBN is trying to achieve. So basically, we believe, again, the direction of the banking, sector in terms of, profitability in 2020 is slightly going to be negative, and investors will also price that into their decisions. So for us overall, we believe also that in manufacturing, especially in consumer goods, brewery companies will continue to find it challenging, to compete. We're expecting a bit of, price, changes in the year in the brewery sector. So that will also affect volumes, and investors also will price that in. A lot of, the companies we have in this segment, the Nigerian breweries, the Guinness, the international breweries, have been badly bruised, and that is because performances since 2017 has been underwhelming. Also, when you think in terms of, the real estate segment of the market, we have quite a few names quoted on the stock exchange. That exactly is not a sector to look forward to currently. We saw a negative performance in 2018. We saw a negative performance in 2019 as well. In fact, the real estate sector has been in a recession since 2016, and the government is not doing enough, to support the sector. So we believe also that in terms of the trading, investor sentiment in that sector will be negative in 2020.
All right, thank you for your time. Adedayo Bakare. Adedayo Bakare is an investment analyst with Afrinvest Securities. Okay, let's do an